Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, March 28th, almost 9 a.m. A little bit late this morning. Had to get everything set up, but we are back and ready to go. We're in the new studio, or not the new studio. It seems like a new studio because we're barely here now since we're traveling so much, but we were back in the old studio. This is the last day of Q1. Not only is the last day of trading for March, but it's the last day I realized this morning for Q1. So this is the day where we end out the first quarter of 2025. It feels like it's going way too quick, but we are officially here. And starting next Monday, we're going to be starting out Q2 for, well, actually Monday's March 31st. So technically it's the second to last day of Q1, but April 1st on Tuesday, we officially start Q2 2025. We got a lot to talk about. We got a ton of stuff going on. Last night, we had some headlines that happened, which were very, very weird. They are affecting the broader stock market. Right now, we've got PCE data that came out this morning, and that PCE data, let's just say, wasn't the best. There was a miss on expectations to the upside, which is not good for inflation. The probabilities of a rate cut before the second half of the year, aka a rate cut in May, yeah, I based on this PCE data, probably looks like it's not going to happen. The 10-year down a little bit this morning, which is good, but core inflation still is not the best in the context of PCE. We'll talk about that. And then we'll obviously see what's happening in the context of earnings. The pre-markets right now are red because of this PCE data. But on top of that, I mean, we've been in a little bit of a downtrend since basically Tuesday, when everything started going red. Palantir down about 1%, SoFi down 2%. Robinhood is down below 43 right now. Nvidia just got demolished a couple days ago from that China headline, and now it's getting hit. Robinhood right here down 3.39%, going down not only with the broader market, but also with Bitcoin. That is down 2%. So we'll be talking about all those different stocks, not only in terms of why they're down, but also the implications of how they're down in relationship to the broader stock market. That looks like it's headed for another red day. Now, maybe we get a reversal on Friday. Maybe we get money coming back in. But as of now, it looks a little ugly. Yes, and there also, prayers go out to everyone in Thailand. Pretty rough 7.7 earthquake. I saw some videos this morning on what's going on there. It's bad. It is not the best. And obviously, those can not only have impacts for society, impacts for the market. So you got a lot of things going on right now based on also some of these headlines we got last night around tariffs, which, of course, the market really started getting into a downtrend 3 days ago when Trump announced automotive tariffs, 25% across the board for any company building cars not made in America. A lot of these car companies, GM and Ford, ship their parts, 40% of them across the world. So those also get tariffed. And we're going to have to see what that ends up meaning for the broader markets. Let's get into PCE. This is what we got right now. So for those that are just joining, 2.8% on the headline. 2.8% on the headline is what you have for PCE. And that's why the market also is getting a little hit. So let me pull this up right here. Here we go. So core PCE rose 0.38% in February, lifting the year-over-year figure to 2.8% from 2.6% in January. Headline PCE rose 0.34%, leaving the 12-month rate steady at 2.5%. So that 2.8% on the core headline is what's really upsetting the market right now. And it's upsetting the market because CPI and PPI were really good. I think we got those 2 weeks ago. And because CPI and PPI were really good, it's kind of this question of just like, well, why, what's happening here that's causing the pain, and how is it reflecting in PCE that's leading to the issue that we're getting right now. The other problem with PCE is that it's showing that the progress that we thought the Fed was making on inflation has been made, but there are roadblocks in it meaningfully architecting itself into this world where it's like, okay, inflation is on a clear trajectory down. Now, a lot of people feel inflation is on a clear trajectory down. I still think it's on a clear trajectory down based on the shelter data that I think is lagging as well. But even truflation, we're up at 1.78%. This thing was at 1.34% 3 weeks ago when we had CPI and PPI. So you kind of have the other non-lagging metrics also showing, wait a second, things are going still a bit higher. This number, again, was kind of annoying because this is not what I think the market expected. The market wanted a clear read of showing some sequential downturns or at least like flat year over year, month over month. And in some of the metrics on PCE that happened, but in the context of core headline PCE, that did not happen with 2.8%, which is why markets are also down right now. And that's not the best thing that's happening. Now, the 10-year is getting a little hit, which is nice to see. This 10-year has been spiking the entire week. So I guess some part of the core PCE readings are letting the 10-year realize that, hey, things are a little bit better than expected. But that is kind of the core reason we're seeing a bit of a hit. So again, it was up 0.3% month over month. In some specifics, the core PCE index, which excludes volatile food and energy, that increased 0.4%, the most since January 2024. See, that's just not a headline we want to see. Above 0.3% the previous month and forecast above 0.3%. Food, while for food prices were 0.3% and energy were up 0.1% after a 1.3% surge in January. And so we just needed this number to go a little bit further down, and that's not exactly happening right now in the context of PCE. So that's what we got in the context of inflation. The jobs data yesterday was okay. We had jobless claims coming in at 224,000 versus 225,000 expected. That wasn't too bad. We also had GDP estimates coming in at 2.4 versus 2.3%. So look, I don't think this PCE number is horrible. It's just in a world where we have all this volatility for other things like tariffs, that's not what we needed to see. If we go across the pre-markets, S&P 500 is down 0.48%. We were down 0.27% yesterday. We did lose the 200-day moving average 2 days ago, and it continues to be under that range. Robinhood right here being very volatile as a high beta stock, down 4%. All the things we saw at the Robinhood Gold event were incredible, but they kind of just don't matter in the context of the broader market right now. And so, look, it's great for a long-term trajectory of Robinhood's growth, but if Trump wants to be Trump, inflation wants to continue to stay elevated, that is going to hurt Robinhood, along with Bitcoin is going to take a little bit of a hit. GameStop was down 3% in the pre-market. It was down 22% yesterday because apparently raising $1.3 billion to buy Bitcoin, which, by the way, is happening at a 0% convertible, which I found out about yesterday, straight out of Saylor's textbook here. The market didn't like it. I mean, you would think the market would be kind of okay with a company that really has no plan to go down the Bitcoin route. The market absolutely hated it, at least for now. So you got GameStop right here down about 3% after being down 20% yesterday. MicroStrategy itself is down about 2.95% after being down 2% yesterday as well. Rocket Lab just got a contract. So this news happened yesterday, and that's why Rocket Lab is reflecting itself down up about 7.2%. It was down 5% yesterday. $5.6 billion contract through 2029, 30+ launches with Neutron. Reaffirms their 2025 Neutron launch, the NSSL. So I saw this news actually on the plane yesterday, which is super cool. I mean, we got another launch for Neutron. So here is the actual headline right here. 5.6 billion is the number. The U.S. Space Force's 5.6 billion NSSL program. Neutron has been selected to compete for the nation's top security national security missions underneath the U.S. Space Force. So, I mean, look, this is not bad. This is bullish for Rocket Lab. Now, granted, is it bullish enough to withstand the relatively horrible sentiment we're seeing because of tariffs? I don't know. But it is nice to see this. Yeah, it's not their 5.6 billion. It's a pool to share with other companies in the program. They've just been selected to compete for it as well, which is a good thing. So, I mean, look, I saw this news yesterday on the plane. Rocket Lab was up 10%. I was like, okay, this is cool. But in this market, it's like, all right, you're up 10%, but what does it really matter? Like as of now, dude, we were so close to being out of it. I feel like we were so close to being out of it. We had 3 days in a row of just pure green. We were like, all right, we're moving on. It's time to move forward. And then you had a string of events that obviously caused this to not play out. Now, here's one thing that is happening that is also very weird, and I'm trying to make sense of it. The Coreweave IPO, which was 5x oversubscribed, one of the hottest IPOs of the year in the context of AI and cloud infrastructure, is priced from a valuation of $30 billion to $23 billion. And part of the reason is potentially that there's not enough demand and that people are worried that it's just a GPU play that is entering into a world where GPU demand might be slowing down. We had a Microsoft headline come out the other day, which is probably why NVIDIA is getting hit. That was reaffirmed by the chairman of Alibaba saying that, hey, these companies are spending way too much on GPUs and they don't need them. NVIDIA is now putting up $250 million, $250 million to anchor the IPO and support it, which feels kind of weird because Coreweave is one of their biggest customers. So let's hear from the Coreweave CEO and try to get an understanding of what's going on here. But that also, I think, is shaking up the AI trade here right now.
Going public today on the NASDAQ. It is the biggest U.S. tech offering since 2021. The company priced the IPO at $40 a share. That was below its expected range. It's going to be trading later today under the ticker symbol CRWV.
Oh, it's happening today. It looks like, I don't know what's happening today. It looks like it's happening today. So we're going to get an IPO probably at around 11 a.m. or 12 p.m. today.
Joining us right now, first on CNBC, right here on set, is Coreweave's co-founder and CEO, Mike Intrator. And Mike, thank you for being with us today.
Thank you so much for having me. I'm really excited for the day. I'm really excited for Coreweave, and looking forward to speaking to your audience.
I know this is a really big deal for you all. Based in Livingston, New Jersey, you all have come a long way from what you started out. You are building out databases, and you started doing that for Bitcoin mining and other operations. You jumped on the AI trend, and you were there early, and you got to these data centers and are building them out at an incredible pace, building up revenue at amazing, phenomenal speeds. I think revenue growth of more than 725% for the last year. But you're also taking on a lot of debt to do it. And the IPO that came out is the biggest tech IPO.
$10 billion in debt. They're growing 700%. They went from 16 million to 2 billion in revenue, but they have 10 billion in debt.
It's 2021, but it was below expectations. What happened when you were out there on the roadshow selling this?
Yeah, so look, it's clearly a tough tape, right? Like, you know, there's a lot of headwinds in the macro. There are headwinds in the AI trade, and you know, we definitely had to scale or right size the transaction for where the buy interest was. This is going to be a very, very exciting transaction for us. It does an enormous amount to move the company forward. It positions us for the next stage of growth for Coreweave, and this is just an incredibly fantastic time to begin that journey. Going public is just a day in the life of an incredibly long-term transaction and business that we're building.
You're raising about $1.5 billion. I think expectations at the high end would be that it could be as much as $3 billion. Still, $1.5 billion is a big chunk of change. I think about $1 billion of that is slated to pay down debt. Is that the case?
Yeah. So we're gonna pull in the $1.5 billion later today. It's very exciting, and then we're going to use that to pay down some debt. We're going to use that to continue to expand our footprint, to invest in the human resources, to build the business and continue to scale it at what has been an absolutely unbelievable pace over the past several years.
Yeah.
It's really exciting.
The pace has been breakneck. It has been phenomenal to watch, but there have been questions that have been raised this year by what we heard from DeepSeek earlier this year about whether all of these companies will continue to spend at the same pace, whether they're still going to need the same computing power. What do you say to investors who are looking at this and have some of those questions?
So DeepSeek was one of the most amazing dislocations that I've ever seen, right? Like from the perspective of folks who watch your show, DeepSeek triggered a bedlam, right? But on our side of the table, on the compute side of the table, where the rubber hits the road, there were only two things that actually happened. There was a massive spike for spot computing costs. Mm-hmm. And then there was, my phone just blew up, and it was all of my clients trying to figure out how to build bigger, how to build faster, how to bring on more infrastructure as they continue to move forward.
Why did DeepSeek spark them wanting to bring on more computing power? Because
they looked at it as this is a normal kind of progression of how compute is going to be used. And as the space continues to move forward, as the compute becomes cheaper, they're going to have an opportunity to integrate their solutions into a broader part of the economy, which will lead to more demand.
So Jensen Huang of NVIDIA has said the same thing, because NVIDIA shares took a big hit when this news came out. He has said that it means that it's going to move beyond just the biggest companies, the Microsofts, the Amazons, and others who are investing on this. Have you seen that yet? Have you actually seen smaller customers who have come in and said, we want to get on board with this?
Yeah. So we've seen all kinds of customers. I mean, it's been everything from the AI labs like OpenAI that just did an amazing contract with us a couple of weeks ago, JP Morgan to IBM to Jane Street, right? Like it's just an incredible breadth of companies and enterprises that are really moving forward to begin to integrate this infrastructure into their business models, into how they drive their business forward.
Let me bring up a couple of things from just the last week or so. On Tuesday, Joe Tsai, the Alibaba CEO, got up and said in front of a conference that he thinks that there is a bubble forming in the data center business at this point. The second is Microsoft passed on an option to, I think, spend another $12 billion with you. I know you placed that with someone else immediately, but what do those two things kind of add up to? What would you tell investors? Because that is something that made some investors nervous.
Yeah. So look, one of the things that's made us incredibly effective.
The Alibaba chairman, not
yeah. So one of the things that's made us incredibly effective as a business is that we kind of take a really long-term view of where this space is going, and you're sitting at the first inning of a super cycle as artificial intelligence begins to integrate itself into the economy, into society. And our position on this is that our clients are telling us universally to continue to build. We cannot keep up with the scaling. And so, are there going to be places where there's too much infrastructure built? Sure. But that's not the day-to-day impact that we have. We have a roadmap of infrastructure. We have a wave of demand that we are unable to build fast enough to satiate.
How long is your average contract?
Yeah, so we enter into a very specific part of the compute market. Mm-hmm. We really focus on 4 to 5 year deals, and we have deals that are anywhere between 3 and 5. They have extensions that and options that go into the 6th and 7th year. It's pretty exciting. And so, in those contracts, our clients come to us. They buy a specific piece of infrastructure at a specific price for a long term. That allows us to go ahead into the debt markets and to underwrite that with some of the most sophisticated lenders in the world. And we marry the debt up to a commercial contract that is incredibly accretive for our company.
Right. One of those is with Blackstone. I think they loaned you close to $8 billion.
Yeah, so there was
them and a group of others.
Yeah, it's a whole syndicate. It's Blackstone and BlackRock and PIMCO and Magnetar and Carlyle. I mean, it's really a who's who within the private lending space that came in and understood our contracts and understood the technology and understood the offtake, and were able to underwrite that transaction at enormous scale because of the quality of the entire package that we delivered to the market.
Dude, I don't know about this one. I don't know. Yeah, as Kris says, secured by a depreciating asset. A lot of what's securing the quote-unquote value of Coreweave are their GPUs that are depreciating as new GPUs come into the market. This feels... It feels like it has all the hallmarks of a 2021 IPO that is IPOing for the sake of IPOing to get liquidity for investors, aka the SPACs. Doesn't really have a growth trajectory that is sustainable. I mean, they're not going to grow 700% next year. That's just not going to happen, right? Like, so the question is then, what is the multiple you pay on earnings growth? How do you match out the earnings growth? 62% of the revenue, if you read the S1 again, is from Microsoft. We had again the headline this week that Microsoft potentially is going to be slowing down their AI spend in the context of getting more GPUs. They might be spending in other areas, but does that mean that relationship might not be as extravagant as it is before, which means instead of 62% of revenues, what if that turns into 55%? And then what does that mean for the earnings estimates? And then also, if not now, when, right? Like, I think the reason the Coreweave IPO was 5x oversubscribed was because the AI trade is still intact. And I don't think the AI trade is gone or anything, but sentiment around the AI trade, I mean, with NVIDIA trading at less than 25 times earnings, like, you can't tell me sentiment on the AI CapEx trade is phenomenal, especially with all the Max 7 being down year to date. So it feels like an IPO that has to IPO right now. They're not going to find a better time unless we get a massive market rebound. And then you got Trump that's clearly, this whole Trump put. Well, Trump is making sure that the market stays put, and there's no unique reason for why the market could go higher with tariff volatilities, if not go lower. And so you've got macro working against you. Got inflation that came in this morning at 2.8 versus 2.7. That's going higher. You got the AI trade sentiment going lower. I mean, if you don't IPO like today, when do you IPO? because all of those things have to get a lot better in order for the IPO to actually make sense. 95% of you are saying you're not going to buy the Coreweave IPO. 94% of you said you're not buying it. Now, all of that to say, this might be a contrarian play because now everyone's getting bearish. And even if you don't believe in the business, this thing might go up today just based on the pure fact that people don't like it. But it just has all the hallmarks of feeling like one of those IPOs that's just like, it's got to go public to get liquidity. I mean, they have $10 billion in debt. He literally said they're going public to raise money to pay off some of their debt, which is fine. It's like, yeah, you need money to pay off the debt, but it's a growth stock going public to raise money to not allocate to more growth to take advantage of the opportunity, which investors are okay to subsidize. Like investors are fine with you not being profitable and having more debt if you're growing like crazy and you're going to keep growing like crazy. But if you want to get the money to just pay off some of the debt, it's kind of like, all right, you're taking money from the public markets to pay off some of your private debts. And then we don't even know if your growth is going to be able to be as consistent as it's been over the past couple of years, where, on the private markets, it's easy to grow 700%. In the public markets, can you actually keep up that momentum? So I'm not touching the Coreweave IPO. I think I said it a couple of weeks ago after I read the S1. The stat that stood out to me was that Microsoft stat. And I was like, this is just, in this market, that's a tough risk to take. I mean, it's not like it's not, there's not merit to taking some of that risk. And I think the IPO could do really well today, but it's a little scary given some of the volatility we're seeing across the rest of the board. Bitcoin right here, 85.4. You got Nubank, that's down 2%. Palantir is down about 0.48% as well. So here's a headline let's get to that came out last night. Now, this is such a weird headline. It's a weird headline, and you guys have probably seen it. I mean, it's a real headline, but it's also kind of still not a real headline, even though it is a real headline, but we don't have any proof for it being a headline, but it is still real based on what Trevor Milton said last night. Former CEO of Nikola Motors, Trevor Milton, has been granted a full pardon by President Trump. Now, the reason I say this is weird, outside of the fact that I just said that, is the official U.S. pardons website has not shown that he was pardoned. And it's supposed to be shown that he got pardoned. But this was reported by every major news outlet. Trevor Milton himself posted a video on Twitter last night confirming that this happened. Bloomberg, all these, like, this is not some random blog that said this happened. Like, every single news outlet was like, hey, yeah, he got a pardon. But there's not an official video yet saying that he got pardoned. So this is the weird part. Here's Trevor Milton last night. This is a minute 30 of him talking about this. I think the market's still confused on if this happened or not. But if it did, it would be pretty wild because no one knows why Trump is pardoning this guy.
What's up, guys? Oh, my gosh. Oh, you won't believe just what happened. Sorry, it's pretty hard for me to talk about, but probably the best day I've had in 5 years. I just got a call from the President of the United States on my phone, and he signed my full and unconditional pardon of innocence. I am free. The prosecutors can no longer hurt me. They can't destroy my family. They can't rip everything away from me. They can't ruin my life. I get to be with my wife now. I get to be with my family. It is done. It's over. I am now officially pardoned by the President of the United States, 4547, an amazing man that cared enough to call me personally to tell me how much of an injustice this all was, done by the same offices that harassed and prosecuted him. And I'm now officially 100% pardoned.
So that's like the weirdest thing ever, because in this video, he's not taking any accountability for what happened 5 years ago with Nikola. For those that don't know, he completely frauded investors, gave unrealistic deadlines and prices and understandings of the, like, it's, when you're a public company, you have to be very transparent about your numbers. And he blatantly was not transparent about those numbers and lost a lot of people a lot of money. And he committed securities fraud. Apparently, again, it's not on the official US website, but this is what he's saying, and this is what a lot of the other major news media outlets are reporting. He got a full pardon. No one knows why. I found this news on the airplane yesterday, and like I was just like, what? Like, it's like an hour before we landed in Jersey, and I'm like, Trevor Milton got pardoned? Like, what is going on here? So I don't know, bro. I'm putting the over-under on the odds that are over that SBF gets pardoned next. I feel like there's a shot SBF gets pardoned and he is not going to do 25 years in prison. Like, the odds on that to me are starting to feel a lot lower than usual. But if this pardon is true, which again, we don't literally have the truth of it on the website yet, I think it's insanity. And look, if you criticized Biden for pardoning a bunch of people that probably didn't deserve to be pardoned, I think you got to criticize Trump for pardoning someone like Trevor Milton, which, like, why is this guy like, this really hurts the state of not only individual investors, but people's trust in the fact that the criminal justice system works when someone commits securities fraud, because that's kind of one of those white collar crimes that, you know, it's not like killing someone or something. So it's people kind of look past it, but it is something that can really corrupt the broader public markets, and it's not a good thing. So, I mean, we'll see if that ends up playing out, but yeah, that was a headline last night that was pretty crazy as well. Okay, we got some Europe tariff headlines right now from Bloomberg. It seems like Europe is giving some concessions on the tariffs. Let me pull this up right here. If that's true, then maybe this is kind of bullish. EU plans concessions for Trump after reciprocal tariffs hit. Okay. That seems good. That's from Bloomberg. Where's the S&P? Are we recovering a little bit? S&P. We do have a green candle on that. We do have a green candle. We're still red in the pre-market, 6 minutes until the market opens, but we do have a green candle. The EU plans concessions for Trump after reciprocal tariffs hit. I don't know why they're waiting for the reciprocal tariffs and why they wouldn't do it before. April 2nd is now 5 days away. So, yeah, I would imagine that they are waiting for April 2nd, but it would make sense for it to happen before April 2nd. I mean, dude, that day is going to be crazy. This whole 25% tariffs on autos, I still don't believe it's actually happening. I still kind of believe there's a shot that really doesn't play out the way it's been said it's going to play out. But in the next 5 days, we are going to get a lot of understanding of what's happening with auto tariffs, where they're going, and if it's going to be as aggressive as the industry says it's going to be. Here's Dan Ives yesterday talking about these auto tariffs and what it means for Tesla and the rest of the legacy auto companies as well.
States.
For GM Stellantis, right? I think part of the problem there is that even if you make it in the US, I mean, you're talking a lot of times 40-50% of parts could be from outside the United States. And I think you have 30,000 parts in a typical vehicle. So I think that's what, when it comes to Detroit, this is a gut punch to the 313 if this actually holds in this form.
Let's assume it holds. Dan, where does it leave Tesla? Let's do some single name work. What does it mean for them?
Even though their cars are built in US in terms of Texas and California, when it comes to parts, you still have a good amount of parts that come from outside the US. And I think that's a must talk about. And in terms of downstream, no one is unexposed when it comes down to this. You have half the cars that have been imported into the US 2024 are imported from outside the US. But the ones that are made in US, they still, you have 40% of engines that are basically essentially have parts built from Japan and Korea. And that's why what I could tell you is talking to many in Detroit last night, Europe overnight. I mean, the view is this is almost, I'll say, a non-starter. It would be a backbreaker for the auto industry globally.
What you see right now is some estimates talking about 40% of total operating profits for Hyundai and Kia combined, for example, is one hit that some auto manufacturers would be taking. If this were the final negotiation, if we took President Trump at his word that this is permanent 100%, that there is no room for negotiation, how bearish would you be on the names of auto manufacturers?
Look, if this held and it wasn't in pencil and it was in pen, and it actually got enacted, it would be an Armageddon, I think, tariff for the auto industry.
Dan Ives calls it an Armageddon tariff. This is why I still kind of think it's not going to happen. But, I mean, if it does, it looks like car prices are probably going to go a bit higher.
Others would be less exposed. But Lisa, my whole point is that it would take 3 to 4 years to build a new factory. So the reality is, in terms of this, and actually how U.S. car companies make parts, it's just, I view it as untenable. And that's the street reaction. You see more exposed to GM, Ford, a little on Tesla. I think investors are looking at this being like, look, the supply chain basically almost makes this impossible to actually get some of these parts, even from U.S. built parts, because there's no factories.
I mean, come on, bro. Come on, bro. Are we really doing 25% tariffs on every auto company? Like this, this is just, I really don't think it's happening, bro. But then again, you never know. I feel like April 2nd, Trump's going to try to be like, yeah, I was just kidding. Here's all the deals we got. Like, things are okay. We're not going to do all these tariffs. But then I also feel like he's going to be like the Joker, and he's just going to cause a lot of chaos and not care. We got 2 minutes until the market opens. Real quick, these are the Robinhood March 2025 trading volumes. We got this data this morning. Equity was 109 billion. That's down from 145 billion last quarter or last month. In February, options was 145 million. That's down from 165 million. And then crypto was 10 billion. That's down from 14 billion. All of these are up pretty aggressively year over year, but they're down sequentially month over month. And this also could be another reason why Robinhood is down in the pre-markets. Their Q1, which we're going to run the numbers and try to get the exact revenue estimates probably on the next Robinhood Weekly. It's probably going to be lower than what the analysts expected because March did not have the best month for crypto. So yeah, still really good numbers. I mean, I think they're going to put up at least $850 million in revenue, roundabout, maybe closing in on 900 million. Last quarter, they did $1 billion. So, not bad at all, but it might not be as strong as what some of the analysts expected before. All right, here we go. Last day or second to last day of trading in March. It is Friday, March 28th, 9:30 a.m. Thank you, everybody, for being here. The stock market, once again, is open. Back to the regular bell, no small bell today, and let's see how this market ends up playing out. S&P 500 is down 0.25% on the day. We are down 0.25%. We've got to hold that 560 level. Hopefully we do, but we are red on the open. Rocket Lab, that got selected to be part of a new Neutron launch program, 1941. That's up 5.38%. Tessie is green, and Tessie was green yesterday. So in the midst of all this volatility, Tesla has been holding on to even 274. It's not at 291, but it's not at 215. Tesla right here up about 0.4%. Grab is down 1.34%. Grab is up for the week. NVIDIA is down another 0.21%. It really looks like they want to flush this thing below 100, but it's holding on to like 110, 109. We'll see ultimately if NVIDIA can keep holding these levels. SoFi, 1212, down about 0.69%. Palantir below 90, 89.99. That's down about 1.24%. Oklo is down 0.15. Oklo went from 60 now at 23. This one's been a pretty ugly move since that February tops. Oklo right here at 23.78, down about 0.29%. Affirm's down 1.68%. PayPal's down 1%. The auto companies are down a little bit. Ford's down 0.11. GM's down 0.42. Hims is down 1.5. GameStop is up after a 20% decline yesterday. So that one's getting a little bit of green. That's up 1%. Nubank. Why is Nubank down 5%? There must have been a headline on Nubank that's getting it to get hit. Nubank is down 5%. Usually Nubank's down like 1 or 2%. So that one might be specific to Nubank. Vertiv's down 1.3%. Celsius is down 1%. Google's down 1%. TLT is up a little bit as bond yields have slightly come down on that 10-year today. CrowdStrike is down 0.43%. Net is down 1.32%. Roblox down 1.16%. All the quantum names are down about 2 to 3%. Nothing too crazy. Rigetti down about 1.2%. Apple's down 0.92%. Adobe's down 0.08%. Rocket Lab is actually green. Short QQQ is green. Tesla just went red. NVIDIA just went red below 110. Grab still red around 1.2%. Hood's probably down 5%. Robinhood is down 3%, 42.74. Basically back to prices that it was at last Friday. Mag 7s are all red. Apple, Microsoft, Meta, Google, Amazon, NVIDIA, and Tessie are all down. Amazon back below 200. Google looks like it wants to be back below 160. Google covered calls are printing, but the rest of these names are getting hit. I think Coreweave is going to go public at like 12 p.m., 11 a.m. That usually happens a couple hours after the bell. So we're not going to see that IPO yet, but in a few hours we will. Robinhood right here down 2.43%. Bitcoin, 85,217. CleanSpark down 3%. And then Coinbase at 186. That one is down 1.32%. as well. Let's see the semis. What's going on with the semis? We are down across the board. SMCI is actually green. Intel losing a lot of its steam after that new CEO. Taiwan semi below 170. Qualcomm down about 1%. Broadcom basically flat. NVIDIA barely holding on to 111. AMD went to 115 2 days ago. Got smacked right back down to 105. Again, very kangaroo type of market. Dell below 100, Qualcomm 156, TSM 167, and then ASML right here at 658 currently right now. We still have consumer sentiment. Andy, we talked about the hood metrics today. All of them were down from March or from February, but still relatively good. I'll put the link right here in the chat for the Robinhood metrics for those that want to see it. Kohler is up 20%. Again, Kohler is a small cap. So, I mean, if you invest in this company, it's less than a $500 million market cap. You've just got to be careful with it, in my opinion, but it is up 20% right here. Probably on some specific news they have. It is down also aggressively from that $5-6 high that it was at a couple months ago. Rocket Lab still holding on to 5.81% of the market, giving Rocket Lab some momentum right here. Robinhood 42.69. That's down about 3% right now. Amit, did you talk about the U.S. national robotic strategy to compete with China? No, I did not know we came out with a U.S. national robotic strategy to compete with China. Honestly, whatever robotic strategy we came out with is stupid. The strategy needs to be we ban Chinese robots. I think that's the strategy. Tesla right there below 270. Like, I honestly think the way we're going to compete with Chinese robots is making sure none of them ever enter the United States. I would be a big proponent of that. Granted, I don't know if we would actually ever pass that type of a ban. But yeah, like the way we compete is we have better AI, we have more innovation, and we don't let Chinese robots enter the United States. I think uniquely Chinese robots pose a security threat that is like fundamentally different than the TikToks of the world. But I don't know if Trump would actually ever ban it. Nubank right here, still down 5%. GameStop is up 1.3. Hims getting hit. That one is down 1.16% right now as well. Okay, Kohler beat on earnings. Yeah. All right. So that's why Kohler is up 20%. They beat on earnings today. SoFi just went green. SoFi, SoFi, I mean, yesterday, I think maybe SoFi was down because of some of the Robinhood headlines, and people were, thinking like SoFi's going to lose some market share or whatever, and that's why it was down. It could have also just been more macro, but I don't know if it deserves to get hit this hard. But then again, all the fintechs are getting hit pretty hard, including PayPal, Robinhood, and Affirm. Affirm was down 5% yesterday. So maybe SoFi's not getting hit because of the perceived Robinhood competition. It might just be more because all the fintech is getting some volatility here. MicroStrategy down 2%. Tesla now well below its pre-market highs of 275, 269 right here, down about 1.3%. That is below the 270s. Amid your Uncle Silver thesis is playing out. I was talking about that with him a couple days ago. That is correct. I think he got silver around 27, 28 back in August or October. And there's a great book on silver. I'm forgetting the name of it, but he was showing me the book in India back in October. It's a really popular book on silver, and the entire point of the book is just that in a bear market for stocks, silver tends to outperform. Not only do commodities outperform, by the way, gold's at 3,100 an ounce now. So, I mean, obviously the market's really deciding to rotate here, but silver outperforms as well when you have these types of levels of fear in the broader market. Bank of America actually put out a note that they said gold can get to 3,500 by the end of, I think, 2026, which it would be kind of crazy if that ends up playing out. But I mean, yeah, if the market's rotating that aggressively, then we're going to definitely get some risk off. Nvidia's going a little green. Okay, there you go, 112.17. Now, here's the thing. If April 2nd is not doomsday, then isn't this just the buy the dip, right? If April 2nd is not doomsday, then this should be theoretically a buy the dip. But I think Trump did a hell of a job. You got to give him credit this week of making people feel April 2nd is going to be nasty, especially with the auto tariffs. And so I don't know. At this point, you just wait and see. Like, yeah, buying the dip would be nice, and we get a little April 2nd rebound. But if we don't get an April 2nd rebound because everything goes so ugly, then buying the dip probably gets a little scary right here. Tom Lee says there's going to be a V-shaped recovery after April 2nd. I saw the headline. I didn't really see his analysis on that. I mean, if there's some V-shaped recovery, that would be very nice. Let's listen to a little bit about what he said. But he does think that this is peak fear right now in the markets.
It goes back to this idea of uncertainty around things like trade and situation. The investment thesis.
What's happening
Moving forward?
I think that's exactly what's happening now, Morgan. First, in 2018, which Michael was talking about, the spike in the VIX or the collapse in investor sentiment or consumer confidence, that all happened around February 2018. So really that coincided with that first low that was made in 2018, and the market began to stage its recovery. I don't blame any business or investor for saying, look, there's so much uncertainty, I can't make a decision. I think that's why Rick Rieder's talking about animals in hibernation. But as we start to think about the second half of this year, first of all, we've already had the collapse in sentiment. We've seen $850 billion of cash raised over the past year on money market balances. And then in the second half, we're looking for possibly tax reform, which really propelled stocks in 2017. So I think that the odds of a V-shaped recovery in stocks that come after April 2 is just extremely high, because we've already sequenced a lot of the panic that people saw in 2018. I think it's already taken place.
So what would you be buying right now?
Well, to us, I think Exhibit A for a V-shaped recovery is going to be Tesla, because it's really been one of the most controversial stocks, and it's been caught in that sort of political maelstrom of Doge and Elon Musk's involvement in the White House. And I think it's already recovered more than 15%. But I think if Tesla is leading us into this bounce, that's a bull case for Mag 7 to be the group to own in the next few months.
So Tom Lee is calling for a V-shaped face-ripping recovery in the markets, with Tesla out of all stocks as the leader for this rally. You either believe in that or you don't, but I mean, that's a hell of a call, dude. I think that's even a more of a ballsier call than a year and a half ago when the S&P was like 460 and he said it'll get to like 480 in like 10 days, and he was right. But like Tesla, he is saying, will be the leader of a V-shaped recovery after April 2nd.
So you like Mag 7, even though we've been talking about things like cash burn at Microsoft and all of the CapEx investments and worries about a bubble in AI spending?
Yeah, I mean, in some ways, it's been a self-amplifying downturn, right? Because we've been worried about AI as a bubble and the Coreweave IPO at a time when we have tariff uncertainty. So I could see it as a very convenient reason why investors have actually avoided Mag 7, and it's been the group that kind of really led the downturn. But it is a cyclical trade too, because I think once investor confidence returns and they're going to start to buy stocks, the Mag 7 are not only the best companies, but they're the most liquid, and they've really derated. On top of that, I think, financials and industrials look attractive as well.
So I agree with that. I mean, like, look, I think if people come back to the markets, the Mag 7 has to be, or it doesn't have to be, but it is one of, I think, the most obvious trades to get into. Like, I just don't see a world where in December 2025, NVIDIA and Google are trading at 15 and 25 times earnings. If their earnings growth does not meaningfully decline, which, I mean, that's yet to be seen, but assuming that they don't, that would be weird, dude. It would be very, very weird. So I think his argument about people coming back to the markets and picking the Mag 7 is not wrong. Now, saying that Tesla's going to lead that, the only reason I'm saying that's a really bullish thing to say is because we kind of know Q1 numbers are not going to be the best. So if Tom Lee's saying that sentiment is his bottom indicator here versus just the quantitative metrics, that's a fair argument. But for Tesla to lead the rally, you would need to see Tesla at least at 300 for a face ripping rally, maybe 330, 340. That would qualify to me as a face ripper. At least 315, right? So if that plays out, then you've got a lot of risk on continuing to enter the broader markets. And I think, again, the logic for that would be that the market is overestimating the fears of tariffs, the fears of the extent of how strong the tariffs will be. And Tom's just making a core claim that once that overestimation is resolved in terms of the investor sentiment, people end up buying stocks, which would lead us to this type of recovery that we're seeing right now. Money market funds, I didn't check the data yesterday. I just got the data right now. We increased by 11 billion. Nothing too crazy, 11 billion, 11.8 billion on money market funds last week. There was a deduction of about 1.2 billion 2 weeks ago. So over the past week, total money market funds increased by 11.8 billion. Definitely some money left equities and went into something safer, but nothing that aggressive for money market funds going up or going down. Auto tariffs help Tesla. Yeah, I mean, here's another thing. Elon was saying on Twitter last night, because I think he wanted to make it seem like tariffs were not the best thing for Tesla. But he was saying, hey, tariffs like significantly hurt Tesla as well. But in reality, I think they hurt the competitors way more than they hurt Tesla. I mean, just from a one broad macro claim, if tariffs go into effect and cars truly do become that expensive, you're going to get a lot of people that don't own a car. By the way, I'm picking up my dad's new Model Y today, so I'll post some pictures of that on Twitter when I pick it up later today. But you're gonna have a lot of people that don't want to buy a car and they're just gonna be like, hey, I'll take a robo-taxi. Like if a robo-taxi is like $10 a ride for a couple miles, like that's definitely a lot cheaper than paying a 5% 5-year rate on a $40,000 car, or at this point, what, $50,000 car with how these tariffs would increase, or a $45,000 Honda Civic, which should be no more than like 30,000. So I think you're going to get a lot if the car prices increase that dramatically, where there could be a shift towards more Ubering, Lyfting, and robo-taxiing. And then if Tesla kind of fills in the gap by expanding their robo-taxi, I mean, that could just be a natural tailwind for Elon. And obviously because Tesla cars are made in America. But the question is, how aggressively do these prices increase if we do have auto tariffs? Let's bring on a guest to the show today, get his thoughts on what's going on with PCE, auto tariffs, and the broader market as we end out Q1. Mr. Kris Patel, what's up?
Nothing much, man. Just getting off of my shift from last night. It was a quiet night, so I'm happy. I'm going to Punta Cana with the wife this weekend. I am not looking at the markets next week.
Real quick, Kris, your mic. You got the wrong mic. You got the wrong mic.
Sorry. There you go. Just give me 1 second.
Punta Cana, huh? You're about to have some fun.
Yeah,
there you go.
I got to stimulate this economy for you guys. You know?
Are you going on a cruise or?
No. We're just going on like a resort trip. So.
Okay, so hold on. You said you're not going to look at the markets next. I call bullshit. There's no way you're.
I'm going to try not to look at the markets. Let me rephrase that. But here's my thoughts on this. I noticed something over the last 24 hours that gave me a lot of positive signals on this Trump pivot. What I think, or at least what I think is going to be a Trump pivot. I don't necessarily think that we are at 100% bottom, but I think we're getting close. And I'll give you a couple of reasons why I think we're.
Please give me some hopium. Please do it.
So, did you hear about the news about Trump withdrawing Elise Stefanik's nomination to the UN?
I did not hear about that.
Okay, that to me is a signal. Okay, and I know that's completely out of the economics of things, but basically, Elise Stefanik was in this. Basically, the Republicans control the House, but it's a very slim majority. Elise Stefanik could theoretically, like the special election that could be in her district, could end up getting a Democrat if she were to leave. So Trump withdrew her nomination, right? When you pair that with some of the commentary recently that Trump's been making about some of these tariffs being, they're not going to be that bad. This, to me, shows that the market is finally impacting him and the administration. Elon coming out last night, doing this whole interview with the Doge thing, that was another thing that was a sign that, hey, listen, you know what? Like, people need to not give us as much grief. So I think you're starting to see the basically the put starting to come out, right? I think April 2nd is going to be that, and I'm glad that Tom Lee said at that turning point a little bit, because at that point, there is no reason to do additional tariffs beyond that, because now you've basically like squeezed that lime as much as you could, right? And there's not a lot of juice left on the tariffs, because the thing is, before, his logic for the tariffs was, I needed to do this to basically stave off all the problems that the Biden administration left me. But the thing is, as time goes on, this is no longer the Biden economy or the Biden holdover economy. This is the Trump economy. And the Trump economy, if it goes under his watch, people are going to blame him. The one thing that I know about Trump is that he's a pragmatic guy, and he knows if he lets the economy falter under him, or at least the public thinks that it's going to be under him, that is going to end up resulting in literally a slew of Democrats coming into power next year. And the midterms are going to say, look, Joe Biden left you guys with a healthy economy, low unemployment. Trump came in, your unemployment's up, your markets are down, and they're going to be right by saying that. So
Do
I think
you really think politics is what's going to trigger the Trump put? What if he just turns into the Joker and stops caring and just causes chaos?
no, man. The one thing that the one thing you have to realize about Trump is that he is chaos, but he's measured chaos to the point where he's going to get you to a point where you're about to break, and then he'll negotiate a deal with you. Okay. Like if you know his negotiating tactic, like some of the stuff that he used to do, and this is a grimy way of doing business, but it is a way of doing business. He would basically have contractors come and do half the work. And then when it came time to like pay them, he would be like, oh, this wasn't right, blah, blah, blah. And he would like try to get a discount out of you last minute after everything is already done, So the thing is, Trump is that kind of person where he is very transactional with how he deals with a lot of things. And if the Europeans, the Canadians, and the Mexicans give him enough for the political victory that he needs, then I think at some point, he's going to have to flip.
I can't say. Hold on. Do you think auto tariffs actually happen 25% in 5 days?
I think there's going to be a lot of carve outs. It could still theoretically happen, but it's going to be a lot of carve outs. I think the ultimate goal here is not even Mexico and Canada. It's ultimately China. One of the things that I think China is already screwing up a little bit too. Did you see the news about China going after Li Ka-shing from Hong Kong with the port situation?
No, didn't see that.
Okay, so Li Ka-shing is this guy who owns a conglomerate called something Hutchinson, and basically they own all these ports around the world. 2 of them happen to be on either side of the Panama Canal. The challenge is he is a Hong Kong person, right? So basically he falls under the Chinese label. Now, BlackRock came in and said, we'll buy the entire ports business from these guys. Now, BlackRock is an American company. The Chinese are like, wait a second, like we no longer control both sides of the Panama Canal. Like this guy's a freaking traitor, right? And so they've been going after this guy hard. Like I'm talking about like relentlessly hard. The problem is, on one hand, the Chinese economy is slowing down. So they really need to be softer on their corporates. But at the same time, right now, they just kind of faltered a little bit, and people are like, "Wait a second, here comes the Xi Jinping from 2 years ago when he was locking people up and getting them in hot water and re-education camps." And so what that does is Trump is really like fucking with the Chinese right now. Like he's doing it. I don't know. It is so funny because he'll be like, Xi Jinping is my friend, but everything I'm going to do is to screw over the Chinese.
And you think the auto tariffs are more in line to deal with the international car manufacturers versus the American? Like he could give a carve out for GM or Ford, you think?
I think he can give a carve out to Mexico and Canada because that's where majority of the cars come from anyway. The Europeans, he's trying to extract a lot of concessions from, because if you look at the cars that would be impacted the most, it's a lot of German cars.
Yeah.
The Germans send over BMW, Audi, Mercedes. I mean, we're their largest market outside of Europe. So if there's going to be a person or a country that's going to be disproportionately impacted, it's going to be the Germans, So that's why today you saw some of the news around some of the concessions that that Europe is going to make. I mean, Germany's the largest economy over there. So, I wonder what's happening in the background in terms of negotiations, because, it's going to be one of those things where it's going to be like, listen, let's all gang up and like mess with China.
Yeah.
But they're not going to say that up front,
Yeah. If Europe's giving concessions, technically, is this working what Trump's doing, even if it's creating a lot of volatility?
It could. I mean, then there's also the Japanese and the Chinese, too. I mean, the Japanese and the South Koreans who are already producing cars here in the US anyway. I mean, sure, a lot of the parts are coming from overseas, but once again, they'll get carve outs. Like the guys from Hyundai were over with Trump literally a week ago.
Yeah.
So I think April 2nd, we'll see what the carve outs actually are with a lot of these auto manufacturers, but a lot of those carve outs are going to be tied to reciprocal like deals that have to be made on the other side. This whole thing with Mexico and Canada, at first I was like, well, this is kind of dumb. Like, why would he go after two of our like biggest allies in the continent? You know, now that I look back, I'm like, well, I think what it is just a reminder to them to basically not let the Chinese be the, you know, don't get too close to China, basically. I don't know if you saw this either, but China withdrew its plans to open a BYD manufacturing thing in Mexico. Did you see that?
I did not see that. No.
Yeah. So I think what it is Trump is really trying to get a lot of these countries to decouple themselves from China. And I think that's the ultimate goal. You know, put the Chinese in a box and get them pretty much all fucked up. And what's messed up is the Chinese economy is already kind of like on a shaky legs. So I don't know. Like this is going to be this is definitely some geopolitical work in the background. But I think at some point the Trump administration has to realize that we can't burn down the house to cook a steak. You know, even if inflation is that steak, you can't burn the house down to do it.
Yeah, and if you're going to cook it, it should be a medium well steak. In the context of PCE, so 2.8%, what was your take on that? The 10 years down. Don't you think the 10 years should be up a little bit, or how are you thinking of this right now?
You know, I honestly don't understand the reaction. I really thought that we would end up seeing a 4.4 handle, not the other way around, because it seems like it's accelerating to the wrong side. But then again, there's probably something in the report that we have to look into deeper and look at the data and say, okay, you know what, this could be something to keep in mind. You know, this could also be uncertainty too, like with so uncertainty is breeding like people into safe havens. So, you know, consumption has slowed. Maybe I have to look at consumption. You know, I think that's one of the things I saw. Consumer spending is starting to slow.
Oh, shoot. We get consumer sentiment in 5 minutes.
There you go. So we'll see.
All right. So Kris will be with us in the next 5 minutes, folks. That'll be a big one for Michigan. Kris, how do you feel about this hard data versus soft data debate? Like, this sentiment for Michigan is soft data. The hard data is showing CPI and PPI a decrease. Do you think that wins against these surveys that come out every month?
I don't know, man. These days, everything is jaded with so much opinions. So the thing is, you have to really piece together what's actually happening on the ground, and you don't know the people who are doing the surveys. You don't know how things are impacted. So I don't know. The one thing I will say is that there's a lot of people calling Trump right now that he actively listens to. Okay, some of them are like the CEOs of these major companies, because ultimately he needs them to continue to invest in the country. And if the CEOs don't feel like, hey, listen, like we're basically gonna be, you know, we have a partner in the White House, they're gonna cut back on CapEx. And if they cut back on CapEx, now automatically you're going to see that impact these companies on the ground, and that's going to impact the economy. You know, so even if we don't want to believe it, a lot of these major companies, they control some level of decision making in the grand scheme of things. You know,
why would you not buy the Coreweave IPO?
Okay, so this one is actually very simple to understand. If you have an asset that's depreciating, that's secured against the debt, that means the debt stays the same, but the asset is going down over time. And it's not even like real estate where you're depreciating the building, but the land value is going up. You know, this is literally like you're buying something and it's going to zero, right? So the more time you give it, the more likely it is going to be zero. And the other thing is, like, NVIDIA is just pumping out better and better chips. On the other hand, there could be a like somewhat of a, and I think Dan Niles is the digestion phase.
Yeah.
Right. Yeah. Where basically there's been so much like AI spend that's coming online all of a sudden that sometimes it may be a good idea to kind of pull back on some of that. So that's why you're seeing like Microsoft's like, yeah, you know, we're going to cancel some of our leases. Like, that's a big deal for Microsoft to say, hey, maybe we don't need to spend as much on AI infrastructure. You know, and if Amazon and Google start to kind of like say similar things, not exactly the same thing, that just goes to show that, you know what, there is definitely a lot of demand for the AI side, but there's also has to be like monetary value behind it. Like these companies need to make money. Otherwise, people are going to sell them off. And right now, like Google's down to like the 160s, Amazon is down. They cannot afford to have a few quarters where, you know, they're basically getting absolutely destroyed, you know, on their earnings. Yeah.
Do you think then that means Coreweave's IPOing for the sake of IPOing and it's a cash grab?
I think Larry Fink called him up, man, and just said, listen, you better get us our money. Because if you don't get us our money, we're going to start messing with you. So I think BlackRock made the call, said, listen, you better IPO, get that thing out the door, give us some of our money back. And this way they could, you know, they could go on. And NVIDIA is like, we already dumped so much money into this. We got to save this IPO. I mean, you know that NVIDIA already owns a lot of Coreweave.
No, 5% of Coreweave.
Yeah. So it's kind of weird, man. It's like, I don't know. I'm not saying that the AI trade is bad. It's just you have to look at the parts of the AI market that make sense. In my opinion, Coreweave is not in the strongest in terms of having a moat either. Like its biggest customers are its competitors.
Yeah. All right, we should be getting this consumer sentiment in a second. While we're waiting for that, do you agree with Tom as well that it's going to be a face ripper after April 2nd?
It could be. I think it could be. I think just the moderation of Trump's tariff talk after April 2nd might do the trick, right? Mm-hmm. So to me right now, when I look at uncertainty, I think of it as gravity. Whenever I see anything, it's always about gravity to me. So when you have high interest rates, that's gravity. When you have Trump constantly putting uncertainty in the market, that's gravity. So if you're able to take away certain things, it's almost like taking away gravity from the markets to go up, you know? So right now the consumer is still...
Real quick, sentiment. So market wanted 57.9. We came in at 57. That's not bad at all.
The inflation expectations is not good, though. Look at that. 5-year inflation expectations.
The market thought it would be 3.9. That came in at 4.1. Consumer expectations finals 52.6 versus 54. That's a little bit of a miss. Current conditions 63.8 versus 63.5. That's a little bit better. Inflation expectation 5% versus expectations of 4.9%. This should probably be a nothing burger.
Yeah, I don't think it's going to be much. I think overall earnings next quarter are like, especially the commentary on the earnings is going to be a very interesting thing to look at, because a lot of people are going to be asking, like on analyst calls, like, do you see a weakening consumer? Do you see demand dropping off? Do you see the impacts of tariffs?
I mean, dude, we didn't even Lululemon. They lowered their guidance pretty aggressively for this year. They're down 13%. I mean, people in this environment are not going to be buying $150 hoodies, right?
Yeah. The impacts of all of the tariffs talk and everything else, it's going to start to show up on Q2 earnings, and you could see a lot of CEOs and a lot of CFOs basically use this as an opportunity to kind of like pare back expectations, making the second half of the year easier for them to beat. You know, this time they can just say, look, we're seeing consumers like making, you know, like more narrower choices on product categories or whatever, and people just, you know, are not spending as much, and that might end up causing a lot of earnings revisions to something that's a little bit easier to beat going into the second half of the year. And I think that's where you could actually see a recovery, because at that point the sentiment will be so bad that, you know, we'll be on the other side. The one thing I would tell you guys when you're looking at your portfolios right now, and especially if you have great companies in them, you know, you got to go back to Buffett. And Buffett said, if you buy a house for, let's say, $20, and someone comes to you and says, I'll buy your house for $15, that doesn't mean you have a $15 house.
Yeah.
Okay.
Yep.
And you shouldn't be like sad about it, because if you're sad about it, then you're gonna sell. So don't do that. Instead, just say, you know what, I have a high quality company, has sustainable, durable earnings. I'm sure that this is some short-term volatility stuff, and things will go back up again, and, you know, and ride the investment wave. But like I said, you have to be in that high quality company that can survive this downturn. If you're in some bullshit company that's basically loaded up with debt, can't pay its balance, can't pay its bills, and at the same time is basically banking on the Fed to cut interest rates and them issuing a ton of shares, then you got a problem. So right now is a good time to analyze businesses and business models that can weather the storm and basically just buy them and chill.
All right, let's get this update on consumer sentiment, and then I want to ask you about your thoughts on Robinhood as well.
And there has been some movement. We've gone from 57.9 to 57.0 on the headline. That remains the weakest confidence headline number since Nova of 22. If we look at the current conditions, it moved from 63.5 up to 63.8, still remains the weakest since SEP of 24. Now, if we look at expectations, moves from 54.2 to 52.6. That would be the weakest going back to, July of 22. Now, here's where it gets interesting. The last look on inflation really ramped up. 1 year hit 4.9. It moved up again to 5%. 5%. That equals where it was in November of 22. You have to go to July of 22 to find a higher rate of inflation. Finally, 5 to 10-year inflation. Our last look, it jumped up to 3.9. It jumped again to 4.1. Equals where we were, get this, in Feb of 93. To find a higher number, you're in August of 92. Now, these numbers are squishy inflation numbers. They're based on surveys, and the market really isn't moving much on interest rates yet. Remember that these numbers were somewhat expected based on the mid-month read, but definitely something to pay very close attention to. Remember, 10 years closed at 4.25 last week, so they're still at 429, up 4 basis points, but they're down 7 on the day. David, back to you.
All right, Rick Santelli, thank you.
All right, that's what we got with consumer sentiment. S&P 500 is down about 0.5%. Against expectations, it wasn't as bad, but in general, it's not good having 5% inflation expectations over the next couple of years when the Fed wants it to be at 2%. Okay, Kris, so I was at the Robinhood event when I saw you tweet that you were going long hood, and I showed Tanner, and I was like, we got him, boys. So,
you always had me. It's just, I use Robinhood all the time. All right. I just don't know why I didn't buy more of it. Like when it was a much lower price, I thought at least I had some more time, but my thing is with this bank situation, their TAM has grown pretty significantly, right? If you look at something like Charles Schwab is like what, 200, like almost 200 billion.
Yeah.
Roughly. Right. So number one, you have this brokerage business, but then you also have all these people that are going to be converting. And there's so many opportunities for these guys to monetize the consumers that they have in the future. To me, Robinhood is a solid business. It's not going anywhere. It's generating cash. It's buying back shares. So even if, let's say, the market cap doubles to 60 billion, but at the same time, they bought back 5 or 6 billion in stock by that point, then you're going to get a huge upward move. So I think Robinhood is a perfect long-term company. And the thing is, some of the valuations on it can get to a high point like the 65s or whatever. So I wouldn't necessarily do it. Like someone asked me, like, Kris, would you do like options on Robinhood? And I was like, no, probably not. Only because I don't know what the economy is going to be like. Crypto, it moves in sync with crypto sometimes. So the valuation can go up and down. But Robinhood is definitely like, just buy the stock, hold it, and just chill. You'll make good money over a long period of time,
So
like,
are you already in?
Yeah.
You bought stock or you're waiting?
No. I don't have a lot of cash on the side right now. I'm waiting to pay my, I don't know what my tax bill is going to be because I sold a lot of stuff last year and I had a lot of gains. So I have to pay the taxes on it. And I'm waiting for my account to give me the actual numbers. I also have like a bunch of K1s that I would have liked to pay my taxes in January and February, but I had to wait until these K1s came in. I only got these K1s recently, so I prepared all my documents. So now once the taxes are done, I'll have liquidity on the side. And I'm already thinking about like which companies I want to start to kind of buy into a little bit. And like double up on some of the positions that I have that I'm super bullish on long term. So
NVIDIA right here, 110.58. That one's down 1%.
Okay, I made some commentary last year that I feel now is very prescient. Okay. And I know I got a lot of shit for it because Nvidia did go up really high. I said Nvidia would be flat for the year. I don't know if you remember that. I said I'm not nearly as bullish on Nvidia as all these
You
other
weren't as
people.
bullish. I don't remember if it was flat or down, but you said it was. You weren't as bullish. That I definitely.
Yeah. I was like, look, Nvidia is a great company. It's doing really well, but at the same time, it's all riding on the hopes of AI. And it's a hardware player, which means that everyone needs to keep buying the chips in order to make this work. And long term, it's going to work out really well. But the valuation got ahead of itself really, really fast. You know? So I think that was one of those things that I'm glad I didn't buy into Nvidia. I mean, I traded Nvidia a little bit, but I didn't buy a whole lot of it.
But you do have to admit, trading at 25 times earnings is cheap. I think you're just scared that the growth expectations won't be what they are because there'll be this AI digestion phase, and then 25 times earnings would be expensive.
Yeah. I mean, remember, the thing that people keep forgetting about any semiconductor is that they're cyclical. It's a cyclical business. I'm sure that there are parts of Nvidia that are not cyclical, but majority of its revenue still comes from the cyclical side of its business. So if that's what you and that's been proven out too. Like you saw when crypto was trading super high because everyone was buying Nvidia GPUs, you know, during COVID, Nvidia went up. And then once demand dried up for those same reason, it went down. So any indication that AI is slowing down will definitely knock Nvidia down a little bit. And I think this Microsoft news that they're pulling back on spending more money on the AI data centers, it's not necessarily like 100% the canary in the coal mine that the AI like story is done, but it just means that, hey, you know what? Moderate your expectations a little bit.
Right.
You know? And the other thing is too, if the companies underlying it, like if Amazon, Google, Meta, they don't see a whole bunch of revenue, incoming, they might cut back on some of their capex. And if they cut back on their capex, Nvidia is the primary guy that's going to be impacted outside of some of the other things. But yeah. So
yeah, I mean, and Matthias has a good point right here. Every year, NVIDIA is coming out with a new architecture for some type of chip. I think your argument, Kris, is does Meta need the newest version in 2027? And if they don't, because they're not getting the ROI, that's when NVIDIA's demand goes down the drain.
Absolutely. It's the same thing that happened in 2021 where you saw the hyperscalers hiring a whole bunch of people. It started to impact their earnings. And then what happened? They started just laying people off. So this could be a similar thing where right now, a lot of this, like if you saw Google's earnings, Google was killing it. And then they said, oh, we're spending 75 billion on AI CapEx. And the freaking market said, oh, no, and just sold it off. Right. So I think the market is starting to get to a point where they're really asking, what is the ROI on all of this infrastructure spend? Is it worth it? Are we getting money from this? Because if it's not something that they're getting money for, then it could be something that could be on the chopping block in order to kind of and especially if everyone is doing it at the same time, then that could be something, to just keep in mind.
Okay, so I didn't show you guys this morning, but some of you guys saw it on Twitter. I did indeed take a Waymo yesterday, and it was a pretty cool experience. Kris, you saw the video. What were your first thoughts when you saw this video yesterday?
I've been watching a lot of videos on people taking Waymos. Yours pretty much mirrored their exact experience. The only thing is, I honestly think LiDAR, this whole debate with Tesla, which is Tesla's like, we don't need LiDAR. We can just do basic, just images. That debate has yet to be like adjudicated. But I think the LiDAR part of it is a big deal for Waymo because it gives that differentiator for the regulators to say, well, you know what, this thing has all these extra sensors and all this other stuff. And the thing is, and now that it's out there in the world and it's out there in the ether and people are actually utilizing it, I think it's a lot more like believable that this thing could theoretically one day become a reality. Like, I'll be honest, about 2 years ago, if you had asked me, Kris, autonomous taxi, I'd be like, no, there's no way. There's probably some legal thing. Yeah, the concept would have never jarred with me because but now that Waymo's actively doing it and doing it successfully, I actually believe that this is the future. I think we're going to see a whole bunch of this, you know?
So my takeaway was that it was not scary at all. It felt very normal. Now, granted, I drive FSD every day, so that's probably wasn't that scary, but it was safe. It felt like I had my own privacy. There was maybe one moment where I felt like it was gonna like turn into something the wrong way, but obviously it was fine because they're just trained so well on that city in particular with San Francisco. Here's my question to you. Are you scared at all that robotaxi with neural nets versus LiDAR is just going to be a better product? Like the iPhone is just like better than Android, which is why it sells more? Or do you think that their execution with Waymo, they're expanding to so many cities and Tesla's barely has one, it doesn't even have one city until June. Do you think that outweighs the product differentiation between both of them?
I think this is like Betamax and like VHS. We're only going to know once it's out. Both of them are head to head. Like right now, it's an unfair comparison because a lot of people are saying, well, FSD. And I'm like, well, you don't know what the real world is like yet, where, you know, there's got to be this entire ecosystem that gets developed around it. And Tesla doesn't have that yet. And once they get to that point, we'll see on a head-to-head basis which one is better. And believe it or not, this market could be big enough to support two major players. You don't have to be in a position where it's like one person or one company is going to be the main winner and everyone else is just going to die. Like, no, you could bet on multiple companies and multiple things and see how things go, you know? So I think a lot of people, the one thing I notice and I really hate about the Tesla community, and I'll just tell you guys straight up, you get too freaking, like, they get way too militant. Like, FSD is better. Like, bro, you haven't even been in a Waymo and you're already like, FSD is better. Like, how do you compare against something you've never tried? You know, it's the dumbest thing. Like, I could say, I like Coke. I think Coke is the best. Yeah, but you ever tried Pepsi? No, but I don't need to try Pepsi. I know Coke is the best. Like, okay, you know. Like, you got to compare and contrast here, buddy. You know, so
yeah, I think there is a very well, it's just cultish reaction to, and I think, quite frankly, it gives the Tesla community a bad look because Waymo's out executing Tesla on robotaxis right now. Now, granted, again, you could say neural nets are better, LiDAR is stupid, LiDAR is going to fail, yada yada. But 200,000 paid rides a week is 200,000 paid rides a week.
Yeah, and they're expanding to multiple cities. The fact that legislatures now are actually letting Waymo into their cities is a big deal. Okay. That means that they feel like, hey, the citizens of our city are not going to absolutely destroy us if something happens. They're taking the risk to get this through the door. So I'd say if this case gets proven out and gets proven out fast, then there's a huge value opportunity for Google to make money on this product. You know, and like I said, this doesn't mean that Tesla is dead or, you know, Tesla isn't better. Like, I'm sure that there are going to be areas where I think the Teslas are going to outperform Google. As an example, if let's say you're going outside of the geography that, you know, Waymo currently operates, geofence thing, then I think Tesla could end up, you know, doing better. Because Tesla doesn't rely on this geofencing and mapping thing. It does it based on an actual AI thing.
Well, this is Doug's comment right here. Tesla can press a button and have millions of robo-taxis anywhere. Waymo can't drive you to the airport. I mean, that's true.
Right?
Right?
Tesla can't drive you to the airport either, dude.
Not yet, but eventually, right?
This logic. What do you mean Tesla can press a button and just say, you know what, I'm going to take over all these millions of people's cars and turn them into taxis? Like, come on, guy. Like, this is the question here is, do you believe that a purpose-built taxi system that Waymo is designing is better than what Tesla is doing with its camera-only features? You know, and I feel like Mark Rober too, that whole thing that happened there, bro, that was pretty bad. You know, and you could see how people are very militant about this conversation and this topic. It's nuts.
Yeah, I mean, look, the annoying thing about Waymo was we did have to walk a few blocks to get there, and that's because of the geofencing. But over time, that should be resolved, and the cost should go down as well. This one was about $15 for about a mile and a half versus 25. The question is just execution here, right? Because let's say Tesla succeeds in Austin, how quickly can they expand across the entire country and then really compete with Waymo?
Let me address that other one first. First, we don't know what the limitations are when it comes to the Waymo thing getting regulatory approval. I'm sure that there's a lot of people that said, look, I don't want these Waymos just picking up random people in the middle of the street and causing all sorts of traffic delays, right?
Yeah.
That there's factors that we are not necessarily pertained to how this thing is going to operate. What I'm saying is Google right now at least is learning everything it can about the limitations of autonomous driving, and like how to run an autonomous taxi network that Tesla is not able to do yet, because there isn't anything that's out there that's active. Once Tesla starts its thing in Austin, like I said, you should fly out to Austin and we could try it together and see if it's an impressive thing. Look, I've been in a Tesla with FSD. I think it's super fucking cool. I think it's impressive as hell. I did notice some limitations, and one of the limitations that the FSD thing has is that there's a lot of time. Your battery just died. There's a lot of times where the Tesla makes you like intervene on things. I don't know if Waymo, you're not even sitting there, so it's not like you're intervening at all. You know, like right now you drive a car with FSD. Like how often do you have to intervene?
Maybe like in a 40-minute drive, maybe 1 or 2 times. And that's honestly just to go through the easy pass and stuff like that. Outside of that.
Yeah. So that's what I'm saying. Like, you don't know what the limitations are just yet on this robo-taxiing. And it's going to be a learning curve that Waymo's been dealing with for the last like 5 years, right? They've been testing this thing out. I think it's starting to hit mainstream. So if I was Tesla and I was Elon, I would do everything in my power to learn everything that Waymo is doing and incorporate that shit into my own taxi network. You know, because that's what you do. You learn from your competitors and you outcompete the shit out of them. And if Tesla has to basically do it via price, they could do it via price. You know, that's the one area that I think Tesla has over on Google right now, which is Google is like these taxis are probably like 100,000 plus. Like they're Jaguar I-Paces, and then they have all the LiDAR equipment. So the expense that they're probably running is rather high. Yeah. And I know that's something that a lot of people are saying, but the thing is, like, for them, they're like, look, we're going to eventually scale out of this. Like, do you know they have a partnership with a Chinese company called Zeekr?
Yep.
You know, so the thing is, like, they also have Hyundai Ioniqs now too. So it's like they are eventually going to work on systems where you're going to have cheaper models with these systems installed, and that should hopefully, you know, bring the price down and basically outcompete the human part of it, if that's what their ultimate goal is, which I think it is. So we'll see what happens, you know. But Tesla right now has created a car that's supposed to, and it looks like it's going to be rather cheap to maintain and operate compared to what the Google version is doing. So maybe that's the edge that Tesla has. I don't know. I guess we'll see once Tesla actually comes out with it. And also, this is the part that's kind of sucks for Elon. Most of the cities in the United States lean very Democratic.
Yeah.
Okay.
Yeah.
And they lean to the left. The challenge is right now, Elon has gone a little bit more to the right. In the
I would say it's a little bit more than a little bit to the right.
Right. So you might face a lot more challenges with Tesla getting into some of these cities, even though technically you should be non-political, non-biased. But governments have a way of injecting politics into things and basically being able to kind of say, well, you guys don't have this, you guys don't have that. And they could just slow roll you into like next 5 years. And that could be something where it gives Waymo a head start. So this is one of the reasons why you gotta, like, when you look at Michael Jordan, you remember what Michael Jordan said when they asked him, like, hey, why aren't you voting for or why aren't you endorsing this Democrat? And he's like, Republicans vote too. You know. So this is one of those times where I support Elon in what he's doing with Doge. I think he's taking a massive L for the country, and that's something that everyone should respect the hell out of this guy. Like, he doesn't have to be doing any of this shit. He could just say, well, I don't really care who's in charge. I'll just pay. When the Democrats are in charge, I'll pay the Democrats off. When the Republicans are in charge, I'll pay the Republicans off, and I'll just get whatever I need from my businesses. And he's not doing that. He's like, no, I'm going to take a stand. I think this is the right person to go into the current thing and he's trying to right size the ship. I wish more Democrats would actually get involved and support this guy with Doge, because even they know what he's doing is right. There is a lot of waste. There's a lot of fraud in the government, and we cannot sustain this deficit indefinitely. You know, Ray Dalio actually went to Congress and actually met with both party leaders, you know, going about
the deficit, right?
About the deficit, I think this week, you know, and this is where Republicans have to stop with this. Oh, we need to lower taxes. Like, bro, keep taxes somewhat measured, because you do need to generate income in order to pay this debt. And the Democrats stop supporting every single goddamn entitlement under the sun for anyone that says, hi, I'm disabled. Like, no, you're freaking 20 years old. Get out the house, go work, go find a job. You know, I think the Democrats, sometimes they go too far into their thing. The Republicans go too far into their bullshit. And then what do we have? We have a fucking country that's overburdened with debt that could default in the next 5 to 10 years. And now all of a sudden we're going to have to make the hardest decisions and basically screw up our entire freaking economy. You know?
It's a rough situation. It is a rough situation. And I mean, I don't know how it gets resolved. It's a really, really tough
We need to
thing.
come to the center, man. We really need to come to the center. People need to wake up and come to the center. And, you know, that's sometimes, like, I'll talk to my wife about it. Sometimes I'll be like, man, I hate how the country has become so polarized to the point where we will demonize the other side without realizing that they're actually trying to do good.
Yeah.
You know, like this whole thing with Tesla, like you're burning down Teslas and you're burning down, what do they call it? Like Tesla dealerships. Like, what purpose does that serve? You know?
No, it's causing chaos, and it's like it speaks to the level of polarization. Like, you're right, Democrats are way too into the entitlements. Republicans are like, don't really have a plan to pay for all these tax cuts, and it results in these massive levels of ideologies that then get to their extremes. You burn down a Tesla dealership, and
yeah,
I don't know how we resolve that.
It's kind of sad, because sometimes I'll have a conversation with a friend or two, and they're like, oh, you Republicans, all you want to do is lower tax. I'm like, yeah, but I also want to cut defense spending, even though I think defense spending is out of control. Like, why are we spending freaking 800, 900? Oh, no, but you Republicans, all you want to do is spend more and more on defense. No, you know. And it's the same thing with me when I approached them and said, look, 95% of homeless people, the challenge with them being homeless is that you're not giving them a pathway to own a home. You're just making shit more expensive. You're like, and the thing is, there's all these NGOs that are wasting this money. Like, bro, like the numbers that you hear out of California, how they spent $20 billion and there's more homeless people, and people are not questioning that. No, and dude, you're just reelecting the same guys? Come on.
I think walking in San Francisco, I saw more homeless people than New York. I really do. I mean, if it's worse than New York, that's saying. And the saddest thing is, I was walking on the streets, Market Street, which is one of the most famous ones in San Francisco, where billions of dollars are being created in value, hundreds of billions of dollars. And there's homeless people on the street. Like, that's a problem with the city more so even than with the individuals. And
they create an incentive to be homeless. They pay people. They just say, here's money, here's free money. You know, drugs. Oh, you know what? You don't have to get off of the drugs. Here's a clean needle. Like, seriously. It's just the logic behind some of these policies. It's one of those things that just, when I look at it, I'm floored by the things, like this whole thing with like no cash bail and crime. Like in New York, they'll arrest a guy 80 times and keep letting him out and expect him not to commit more crime. Like, what's the logic behind that?
No, there is no logic. There is absolutely no logic. Market's getting hit right here. S&P down 1.2, Nvidia's down 2, Robinhood's down 7, Lululemon's down 15, Google's down 2, SoFi's down 3. Kris, Tesla's down another 3, Palantir's down 6. Any logic here on why this is happening right now, Kris? Is it just consumer sentiment?
Consumer sentiment is just bad, man. It's just bad. I think valuations are getting hit hard. People are scared. They're panicking. And this will be the right time. Like, when you look back, this will be like, oh man, wish I had bought more when things like this come up. You know, people should be celebrating red days. Red days are days where you're getting a discount, especially because you're seeing companies that are doing well getting sold off. Okay. So here's the logic. If let's say an earnings report comes out and the company is doing bad and it gets sold off, that is deserved, right?
Yep.
But if the company is doing good and the market is giving you a discount just because, like other companies are also down at the same time, that's the buying opportunity. That's when it's like you're actually getting a discount, So
do you think we have a real shot for a recession this year?
I don't think so. I think the Fed has enough tools to basically stave us from any sort of major recession. And because the Trump administration has both the House and the Senate, they can get legislation across the board that can help out. So like the tax cuts, even though technically they're not tax cuts, they're just tax extensions, because all they're really doing is taking the 2017 tax cuts and making them permanent, right? So they're not saying, oh, let's lower taxes. So at least that's good about the Republicans this time. Some of the other stuff that they're trying to like put into the tax code is a little bit, in my opinion, it depends on where you are. Like this whole thing with no tax on overtime. Fundamentally, I agree with that, but at the same time, that means a lot of people might not exactly want to do a lot of work during their regular hours so they can, squeeze in more overtime. So because, you're getting paid time and a half and then no taxes on top of that, it's pretty freaking good, And trust me, I've seen that at work where I've seen people being in management not do as much work during the daytime, so that this way there was a lot more work to be done and they could just say, well, I got to do the overtime. That's how you see like some of these municipal budgets. If you look at the cops, bro, some of these cops have like $400,000, $500,000 in freaking overtime and their base pay is like $100K. You ever seen that?
Yeah.
It's
incredibly aggressive, and obviously valuations are getting compressed because of that. But I agree with you. I don't see the recession yet. Like that argument, you need to see massive job losses. And inflation is not the reason for a recession. Like you need to see way more hard data. I don't see that yet. And we really need to see Q1 earnings, as you said, all these companies saying the consumer shit. That hasn't happened yet.
Someone said you still have to work normal hours to get overtime. See, there's a difference between showing up to work and actually doing work. See, that's the thing. I know plenty of people that'll show up to work, but then they won't really do anything. And then they'll justify the overtime saying, oh, well, I couldn't get this done. I couldn't get that done. I need to work 5 hours of overtime.
Dude, the amount of people that are watching this stream right now from working at home on a Friday, I don't think that many people are working right now. Let's just say that.
Yeah.
So,
yeah. Dougie's like, stop giving away my secrets. I know you, Dougie. No, but some of it is also product. I mean, it would boost productivity too. Like a lot of people that do work overtime, like an hourly wage, they really do need a little bit more help, especially if you're working like a service job. You can't if you're working a service job and you're literally dealing with people, you're not like, oh yeah, let me deal with less people. And then this way I can get more overtime. Like, no, that's not going to work out well for you. You're probably going to end up getting fired, so.
Yo, one day you guys working from home are going to get a call from the boss and they're going to be like, hey, I see you with all these comments in the chat. Why is your username like I'm beneficial? What is that?
I'd rather see tax rates get moved up where it's almost like, like the tax bracket. So the bottom 25 to 40% of people don't have to pay any taxes because they're already at the lowest wages.
Wait, hold on, you want people to pay more taxes?
No, they don't have to pay more. Like right now, if you make under a certain threshold, if you just take the standard deduction, you're not going to really pay any taxes on it. Remember, we have a progressive tax system. So what I'm saying is
the highest is 37%. You want that to be like what, 40, 45?
No. To keep those there, but I'm saying the amount, the income level that you need to go from one tax bracket to another, raise those tax brackets up much higher than what they are.
Okay.
So right now, if you're making like $40,000 a year, bro, like if you're in most cities in this country, like in the country, you're not really going to save a lot because you're basically going to be paying taxes and that. So I'd say double it up. I think if you're making under 80K, you should not be paying any taxes. I think that's reasonable. I think 80,000, anyone who's making up more than 80,000, start the 10, 15, 20% tax bracket, start them over there. Under 80,000, just cut that shit. You don't need to pay taxes. Pay Social Security, pay Medicare, but you don't have to pay federal and state and city. Raise those tax brackets higher. You know.
Yeah, I mean, so how do you think we would recover that tax revenue then?
Well, there's two ways. You get rid of all this additional fucking spending that you don't need. Stop sending condoms to Gaza.
Oh.
You know, stop paying for transgender surgeries in Guatemala. Like, just stop doing that. That's where the Trump administration has got it right. Like, why are we paying universities in freaking Australia?
Wait, can we have a little debate on this topic? Because I'm curious about this. I wonder what side of you take on this. Why is the United States funding NPR and PBS?
Okay, so I think it comes from a time where you kind of needed to support.
Yes, I understand the history of it, but in today's world where public broadcasting service, there's something called YouTube that is for the public. Everyone has access to that. Why?
It's a legacy. It's a legacy system. You know,
it's just if we're cutting unnecessary spend, why are we funding a media company? They should be able to operate on their own. Like,
yeah, I agree. I'm not disagreeing with you on that. Like, the fact that we're paying them, people should be questioning. I think we shouldn't even be paying Amtrak. I don't even know how many people actually use Amtrak outside of maybe the Northeast corridor. Yeah, you know, and the government subsidizes the shit out of Amtrak. It's like, why? Let it run as a for-profit model. If it can't run as a for-profit model, then that's fine. There's so many alternatives to Amtrak, but yet, you know, there's people out there that probably work for Amtrak that are, you know, that'll say that it's an important, vital necessity for the country.
Yeah, and this is not political. People hear anything that has to do with politics and they get triggered. If we stop funding NPR and PBS, maybe we have a little bit more money in our government that we can spend on other stuff, which maybe means we get spending costs down, which could help bond yields. Like, all of this stuff is interconnected. But yesterday I was just looking, I was like, why are we giving money to media companies? Because everything is a media company at this point. I'm not getting any money from the government. I'm a media company. Why is NPR so much more? Like, at the end of the day, it's a competition for media and attention. I don't understand why the government's doing it. I don't understand why China's I understand why China's funding their own state media. It's because they're, you know, a communist country. Yeah. So those are things that, we should probably cut. And I wonder if the Trump administration actually says, no, we're just not going to fund them anymore.
I think efficiency is the key that I think the Doge people have to really emphasize. Like yesterday, when they spoke about how NIH has, like, I don't know how many, like, different CIOs, like chief information officers. You know, it's like, why do you have so much disjointed parts of the government where, you know, systems are not talking to each other, and the amount of inefficiency that comes with that, and all of that comes with a cost. You know, so if you're able to strip out those costs, that just means that, one, you can pay for some of these lower taxes, but then also you can provide better services too. Because now, like, let's say, like, Social Security, these guys are trying to eliminate fraud in Social Security, and people are pissed off about that. No, you should be glad, because that means that Social Security will be solvent for a longer time.
This is the part I don't understand. Everyone thinks Elon's trying to take away Social Security, and I'm like, he's trying to make sure the people that don't need to get paid or are getting overpaid aren't getting paid, so that there's more money left in the reserves that are going to run out in about, 8 years if we don't do anything about this?
Yeah, I mean, the logic behind some of this stuff, it's like, you see some of these contracts, like the one they explained yesterday, there was $1 billion for a survey. Like, what? Like, that should piss you off. Anyone who's a taxpayer right now, that should be pissing you off, because there's some asshole at McKinsey, at fucking Booz Allen Hamilton. They're making bank for doing absolutely nothing.
Yeah.
You know, and not providing any real value. I think this radical transformation in terms of transparency is something that we really needed. And I hope, even past the Trump administration, Doge actually becomes a part of the government, where every single year there's people that are like watchdogs looking for inefficiencies in government and willing to kind of step up and solve those inefficiencies. You know?
Yeah, I agree. And I don't think I'm not saying abolish public schools or the post office, right? Like, we're not saying privatize everything, but we are saying when it comes to media, which is highly subjective and biased, and everyone has their own opinions, I don't understand why the state is giving any funding in this day and age. In the 1950s, I get it. There was no infrastructure. There was no internet. But it's a different world. Like, we have to adapt.
I think one part of this whole thing that does sadden me a little bit is that some of these guys that they've put in charge, they have done really well in the private sector. Okay, these guys that are on the Doge team, they've run companies. They've run how successful companies work. And all these people that are trying to demonize them, oh, these are just oligarchs. These are guys that basically are trying to enrich themselves. Bro, there is no enrichment in the public sector. Okay?
No, not at all.
No one's like, hey, let me get into the government. I can leave my billion-dollar company behind, or for Elon, multi-billion-dollar companies, and come and fuck around with this thing. Like, no, these people are doing it out of the goodness of, at least in my opinion, they're doing it out of patriotism. And people should respect that, and give people credit. And my problem is people will try to demonize that, saying the reason why you shouldn't be allowed to do this is because you are successful. Like, your success is like a black mark on your intentions. And I'm like, no, they've run companies successfully. That's probably what gives them a unique ability to strip out the cost without actually hurting the overall organization.
And Alex Karp talked about it in his latest book. He said that public officials are not incentivized because they get paid these shitty salaries. And he's like, we should be paying them as much as possible so that they don't take that stupid job working on advertising at Google, and they actually try to fix real problems.
Yeah.
And so these people, the fact that they're leaving and they're taking these massive pay cuts from their corporate salaries, I would say they're trying to do something good. Now, yes, you get the Pelosi's of the world who get into the government and become corrupt, but I don't think that's what Elon's doing, because he doesn't need the money.
Yeah, and that's the Singaporean model, by the way. Like Singapore has some of the highest paid public servants, but they also have a ton of accountability, so that this way it doesn't give the incentive for that person to be a corrupt person. Like if you're making like some shitty wages and you can't pay the bills, and someone comes to you and says, hey, look, if you just pass this one piece of legislation, I'll give you $100,000. I'll give you this, or I'll get you reelected. Bro, what is that going to do? That's incentivizes you to do not what's good for the actual country, but what's good for your own bottom line.
Yeah.
It invites corruption.
Oh, 1000%. And by the way, guys, the Wall Street Journal just confirmed the Trevor Milton pardon is real. So,
oh
Kris,
my God,
quick take on that. What the hell's going on there?
This is one of the hardest parts about like supporting someone like Trump, because you see some of the moves that he's making and you're like, yeah, I'm all for it. But then he does shit like this. I would say, if there's things that I would be highly, highly critical of this guy, the first one is this fucking Trump coin bullshit.
Yeah.
Like that, you don't even know how much that irked me. Like, it was like, oh my God, I can't believe he's rug pulling his own supporters, right? That's like number one. I was like, what the F? Now this, bro, what the?
So you think here's the conspiracy I heard. Pam Bondi, who is our Attorney General's brother, is Trevor Milton's lawyer. You think that,
bro, to spend this much political capital on this guy who's clearly like, there's not even like a question whether this guy is a fraudster or not. He's conclusively he committed fucking fraud, and he committed securities fraud.
Yeah.
Like, how do you trust Trump now? It's.
Why? Do you think he got paid off? Like, why would he do this? Like, what's like why would Trump do this? Right? There has to be something happening behind the scenes.
I mean, Dougie had a 3D chess move that Trump was trying to make. He said that this is his way of reminding the courts that he can basically pardon people even if it's against justice. So he's like trying to I'm like, that doesn't even make any sense. Like, you think some judge is like, man, I can't believe Trump pardoned Trevor Milton. I better become more right wing to make sure he doesn't pardon more people. Like, I don't think that's the case. It's disappointing. And I think the one good thing, and this is what I like about the Republican side, and especially a lot of people who lean conservative, they are all on Twitter dogging the shit out of Trump right now.
Yeah.
Everyone who's like, even if you remotely supported Trump, you're still like, yeah, I'm still going to dog this guy for this move. Because,
and if you're not dogging it, then that means you are completely brainwashed by Trump, because you have to be able to criticize the guy.
Yeah. Yeah, no, bro, this is one of the complaints that I had with a lot of the Democrats when the Democrats did stuff where it would be like, oh, he pardoned Hunter Biden, right? It's like, no, it's okay. That doesn't matter. No, that shit was wrong. You shouldn't have freaking done that. But he did it, but they wouldn't come out. Republicans at least stand on principle to some degree where they're like, no, this shit is wrong.
I think SBF is next, dude. I think that Tucker Carlson interview was the first of his comeback tour, and I think he's going to be next.
The question is, who's the lawyer for SBF? Because I would be out there hiring Ted or Peter Bondi or whatever the guy's name is. I'd be like, Brad Bondi. I'd be like, hey, Brad, listen, I need some help.
Dude, but like Brad Bondi is the lawyer for Milton. I'm reading it from the Wall Street Journal. Brad is the brother of Pam. Pam is the AG. Pam and Trump are close. Also, Milton and his wife gave $1.8 million to a Trump fundraising committee in October. I mean,
is that what a pardon costs these days?
maybe it costs $2 million. Okay, two quick headlines, Chris, and then I'll let you get out of here, and I'm going to get out of here as well. First of all, the Atlanta Fed now thinks 2.8% negative is the Q1 estimate for GDP. I think that's another reason the market's tanking right now, guys. This was 1.8%. Now it's negative 2.8. Yeah. I mean, if we're going to lose by 3% in Q1, that's not the best. And then, Chris, I just want to watch.
Smells like a recession. That smells like a recession.
It kind of smells like a recession. That's not the best. I just want to watch this real quick for a minute, and then I want to get your final take on this Coreweave IPO before it happens in about an hour.
They're able to do in terms of putting all this stuff in a data center, who then have clients amongst obviously the largest companies in the country with the best credit ratings as well, led by Microsoft, which represented as much as 62% of the company's revenues in 2024. The raise here, about $1.5 billion. It did come well below what was the expected range. Remember, it was 47 to 55, downsized in size to 37.5 million shares, down in price as well to 40, but still the largest tech IPO we've seen in the US, at least since 2021. I outlined on Wednesday some of the key questions around the company, of course, the depreciation schedule in terms of those GPUs, its enormous CapEx needs, its very large debt load. But the other big question is simply about demand and these continued concerns as to whether that demand for compute will ever slow from the Microsofts, the Metas, the Alphabets, the open AIs of the world. And that continues to be a question, obviously. In an interview earlier on CNBC, the company's CEO said they see no let up in demand. And frankly, I continue to hear that from any number of the companies that are their customers, including OpenAI, which just put out a new image generator yesterday, Courtney, and fried a lot of GPUs in the process.
Sam Altman did say, because of this new image generator trend that people, I don't know if you guys seen on Twitter, Sam Altman literally said last night, we don't have enough GPUs. Chris, again, your take on this Coreweave IPO, similar to the fact that you just think it's a little bit too risky right now.
I mean, talk about a worse day to come out an IPO, bro. When the market's liquidity is probably drying up and all the people are just kind of sitting on the sidelines. So I don't know. We'll see what happens. But I'm not going to be in Coreweave. I think the business model is really not a good one. So yeah. Why would you update 4.0 enough a GPU shortage, bro? Like, okay. Microsoft has basically said F you to OpenAI, by the way.
How?
You know that, right?
How?
Because Microsoft said, we're not really going to back a lot of the stuff that you're trying to do. Like, because I think Satya got really pissed off at OpenAI. Really pissed off.
Because because they started working with everyone else?
Yeah. So
I think that $13 billion deal is going to go down as one of the worst deals Microsoft make. Like, they did not get anything really from that partnership.
Yeah, unfortunately, I think you're right. Maybe there could be something that Azure integrates that sells, but from what I can see, Google is absolutely killing it with their cloud offerings, and especially their AI cloud offerings. But a lot of that stuff is not going to be available, in terms of it's not going to show up on earnings right away. I think it's going to be a few quarters before we see that. But yeah, I think Google's got a pretty good AI spend for AI cloud. So
Okay, so last thing here, this Atlanta Fed number, that's really tanking the markets right now, guys. I would say that even worse than consumer sentiments, why we're red. If we do go negative 2.8% for Q1 GDP, how do you think Trump reacts to that?
I mean, I don't know. It's not going to be good, because then it's going to give a lot of Democrats ammunition, because it's going to say this is the Trump recession. Because literally last quarter we had the markets at all-time highs, unemployment super low, inflation was coming down, right? And then all of this happens. And
Hold on. So people forget inflation was at 2.4% in September. One of the reasons it went from 2.4 back to 2.9 is because people thought Trump was going to win. They thought the tariffs were coming in. And then what happened in Q4? A shit ton of imports. And that raised prices on everything.
Yeah, a lot of front loading. And the thing is, the more he talks about like tariffs now, the more likely it is that businesses are importing as much as they can before the actual tariffs go into effect. So, I mean, I don't know. Maybe this is some kind of 4D chess, and I'm getting to the point where I'm like, bro, this is not 4D chess. This is just shooting from the hip. But I actually trust in Scott Bessent. I think from what I can see, he's a markets guy. He understands the ramifications of all the policies that are being made. I think he's tempering them where they need to be tempered. And we'll see what happens, But I would say if you have dry powder, preserve some dry powder. And when things get oversold, it might not be a bad time to start adding right now.
Yeah, because I think right now things are oversold, but they feel undervalued because earnings growth is strong and valuations are compressed. But if earnings stop being strong, then valuations might not look compressed, and that's the hard part about buying the dip. You got to bet that like earnings are not going to decline right now.
I think we have to look 2 years, 3 years ahead of time and basically say like where is this company going to be? What are the earnings going to look like? Where is it historically traded? And does this sell-off actually make sense? Like, you remember when in 2022 Meta was trading at $80.
Yeah.
Even though it had a shit ton in cash flows, and the only reason why their net income was negative is because they had overhired. So what did they do? They fired a whole bunch of people and the freaking stock rocketed higher, right? Yeah. Right now, I think that's going to be the same thing with the Amazons, the Googles of the world, where they're spending a lot of excess like cash on AI and all this other stuff. And, if they cut back, they just concentrate on buybacks and getting more efficient. Boom, it's literally the other direction everything moves to. So a lot of great names are being oversold. I think eventually the Trump administration is definitely going to have to pivot. And when that happens, we'll be good. Brad Gerstner needs to write Donnie a letter. Believe it or not,
a big fan of Donnie.
Yeah. So. Well, Brad actually said, like, right now it's time to start nibbling into this market. He actually predicted the down move, and he's actually predicting the other way around. Yeah. So I'll see what happens with that. So, yeah.
All right, Kris. Appreciate you, brother. Thank you. We will talk to you next week.
Later. Good luck. I know you won't talk to me next week because my ass will be in Punta Cana.
Wait, how long are you going to be there for? The whole week?
I have to ask my wife. She booked the thing, but I think from Sunday to Thursday. So I'll probably be back on Friday.
So you're flying straight there? You're flying to Florida first and then?
No, we're flying straight there. And there's like a resort. I don't know. She booked everything. So, I'm just going to go and just relax. Yeah. We'll see what happens.
This is the first vacation in a long time for you. This is good.
Yeah, man. I think that's one of the things when the markets go down like this, everyone should be going on vacation. Just go on vacation, bro.
That's some rich people shit you just said. That's some rich people shit you just said.
What do you mean that's some rich people? You never know, man,
No, when the market goes down, people want to save some of their money. They're too afraid to go on vacations.
Unless
you got some money,
You need a distraction. That's my point. That the one thing that I've noticed, like maybe it's different for other people, but for me, I told you I stopped looking at my portfolio, right? Because the thing is, like, if you keep looking at it, it like encapsulates that downward move in the portfolio. So if you don't look at it, you go on vacation, it's like, whatever. It's like, hey, Kris, how much are you down this week? I have no clue. I don't know how much I'm down. I'm probably down a good amount, but I don't care. What is it? Like, hear no evil, speak no evil, say no evil, whatever that whole thing is. That's how I'm like this. Nope, I don't care. Not looking. You know,
You're in a coma. You wake up in 2 years, be like, oh, there you go. Google's at $300. That's more like it. So.
exactly.
All right. Good stuff, Kris. Appreciate you.
All
Talk
right.
to you later.
Take care. Have a good one.
All right, guys. Cool. I'm out as well. I'll be back for the market close. Ugly day. Been an ugly week since Tuesday. Monday was nice. And then ever since that, the last 4 days have been kind of rough. We end out the quarter on Monday. And so we could also be seeing some volatility as we end out the quarter. People kind of just selling, securing whatever profits they have. It is a Friday as well. So that could be contributing to it. But I think that GDP read we got along with consumer sentiment, yeah, that'll do it for you. That'll definitely get the markets to be a bit hit. And that's what we're seeing currently right now. Coreweave IPO, I think, is at like 12. It's probably going to happen in an hour. I don't know if exactly it's at 12, but it tends to happen later in the day. So by the market close, we'll see how the IPO ended up doing. Word of the day. This is a interesting one, I guess. La-di-da.
La-di-da.
I didn't know that was a word, but it's affected or pretentious. The La-di-da cocktail hour featured fancy appetizers with names that no one could pronounce. They got all la-di-da about wine pairings after taking a single sommelier class. Okay. Pretentious. That's the word. La-di-da. So that's what we got. Palantir also taking a hit. I mean, Palantir, high beta, like Robinhood, both of those, they will go up aggressively when it's time to go up. And when it's time to go down, they get hit as well. 85.26 right there, down about 5.39% here on Palantir. All right, cool. That's what we got. I'll be back on the market close. Steve wanted to get on the show, probably on the close. He has a lot to say about this market. He also has a lot to say about SoFi. So we'll try to get him on later in the day. And then that'll be it. And I'm picking up the Tesla at like 5:30. So we'll end the market close at around 5. So around 3:45 to 5. And then I'll go pick up the Tesla. I'll post a bunch of pictures of that. Officially got all the financing done yesterday. And so in the midst of all this pain, at least we got that to look forward to and to look at. But yeah, it's going to be ugly. And look, Model Y inventories this morning came out. All of it is sold out over the country. Like apparently the Model Y on their website, you can't even buy a legacy Model Y anymore. So we're getting one of the last Model Ys that's out there. It's now going to be all new Model Ys. It's kind of like they're phasing out that entire legacy car. I still don't know if that's going to help their delivery numbers, even though people aggressively bought it. First of all, they gave aggressive discounts, so their margins are going to suck. But even with those volumes, can they beat 385,000, which was the number in Q1? I don't know. It looks like it's going to be closer to 360. So we're going to see how this ends up playing out. Congrats on your dad's Tesla, Q. Oh my gosh. All right, cool. That's it. Thank you, everybody. Appreciate you all. We will be back on the market close. We are here back in the studio, and we'll keep going from there. All right. Bye, everyone. See you guys in a few hours. See you later. Bye-bye.